Hey guys, Boris Lasser from VK Forex. Welcome to our weekly Forex Technicals. We're calling this one down in the dumps, as the week really ended up in a tremendous amount of sell-off for most of the major currencies against the dollar. Past performance not indicative of future results. Trading Forex carries a high level of risk may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you can sustain a loss sum of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be well aware of the risks associated with trading on margin, and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as a substitute for independent research, which should be performed before making investment decisions. BK Forex LLC and bkforex.com are merely providing this information for your general information. The information and opinions presented do not take into account any particular individual's investment objectives, financial situation, or needs. All investors should obtain advice based upon their own unique situation before making an investment decision, and should tailor their trade size and leverage to their personal risk appetite. We're not responsible for any loss in current investment made by readers and clients as a result of any information contained here, and we do not render investment, legal, tax, or other professional advice. And if such advice is needed, seek services of a competent professional. So let's start with the granddaddy of them all, Eurodollar. Obviously, I mean, there's really so many different stories this week, but Eurodollar is as good a story as any. Took out the 30s, came back a little bit above the 30s, and the reason why I think you're still finding this modicum of support underneath the 30 is because if you look at the longer term charts, you basically have, give me just a second for the chart to come up here, bear with me. Suddenly my software, okay. You basically have this is the only thing that's propping the euro up on a technical basis. We basically had a 29.96. We cleared 96 as we tested, sort of went into the 60s, did not quite break, which is why I think that 29.50 is going to be a pretty serious level here. We take that 29.50 level out, the next level of support is going to be underneath 29, and if you go further out on the charts, the real level of support is 27. What are the catalysts to develop that next week? Further stalemate out of Italy, more bad news out of the Eurozone. We'll have to see what can push us all the way over the edge. For the time being, the value buyers came in underneath 130. There was clearly some corporate demand there as well. But it feels like every bounce in the euro is a sell rather than a buy. And clearly, I think it's more interesting to consider the idea of selling weakness here underneath 29.50. Rather than trying to buy a turn here. Euro has been on a technical basis just doing nothing but setting up lower highs continuously. This downtrend very much remains in place. We have really not reversed any of the prior lows. So for the euro to even create a modicum of strength or stability, you'd have to see the pair come up and rally above the 133 and hold the 133 level in order to stabilize. Next week we have the ECB meeting. It's going to be interesting to see. I doubt they're going to cut rates next week. You never know. Mario Draghi is an incredibly surprising guy, and he tends to be, very, very unorthodox in his approach. But I think ECB cutting rates may be viewed almost as a sign of panic at this point. Could exacerbate the sell-off in the euro. The one cool thing, by the way, from an economic point of view, is that of course the lower euro is definitely going to be helping Germany, and I don't think anybody's going to be complaining to see the euro at around 125 or the 130-125 corridor rather than the 130-135 corridor we saw from the beginning of this year. But the critical thing here is how the market is going to digest all the news. I think the dip buyers here are really kind of making a very long-term hopeless punt. I may be wrong. But the trade on a technical basis to me is a sell of the 129.50s and further weakness all the way down through the 128s to 127s. The pound, which I want to take a look at next, was almost a classic break today. We saw the pound basically come down and take out the 150.50 level and test the 150 underneath it. What's interesting, and maybe just a small ray of hope to pound bulls, is that unlike everybody's expectation, including mine, the 150 level really did not set off a cataclysmic sell-off. This could be taken as a small sign of positive strength, in a sense that even though we did take out the very, very major 150 level, we didn't really explore much beyond it, and it got bought up. This could very much be simply, beginning of the month rebalancing a lot of corporate demand and things of that nature. I don't think that structurally you can say that there is a reason to want to be long pound at this point. But any positive upside surprise next week could create another short covering rally out to the 52 level, which is really where the major resistance lies. This 152, 52.20, 52 30 level is the primary shelf on the pound. And if you're trading against that, this is really the primary bearish channel against which the bias still remains to the downside. If pound is able to come up to 52.50 and hold on a closing basis at that level, that would really change the tone to a much more neutral tone and would suggest that perhaps most of the selling is done. But as long as we remain underneath these levels, the bias is to the downside, and I have a feeling there may be more forays underneath the 150. And once 150 kind of goes in a more serious fashion, that is, we started going into the 149.70s, 149.60s, it's very likely we're going to probably go all the way out to the 147s. Let's just go back on the dailies here. Let's just see where the primary, we see we've broken all the key supports here on a yearly basis. We're going to have to go back probably around 3 years. Yeah. And, it's not, there's really not any definitive levels as you go back 3 or 4 years that kind of jump out at you as a critical support levels. But, perhaps over here, although not even here. These are all all above the 150s. This is the 152 levels that now act as resistance. Excuse me. Coming back in here, 49.50, 49.50, 48.50 are the primary support levels here. That's probably going to be the chunky area. So, sort of going down into the 48.50s, that's going to be probably the value proposition for those that are going to be trading underneath the 150 if we break it to the downside. So I do think there's more momentum to the downside. For the time being, I would be completely wrong if we broke the 52.30 level and held above there. That would really change the bias much more to a neutral bias. So that's how I would be looking at the pound as it stands right now. The yen, very interesting. So the yen did a lot of very different and interesting things this week. We did a huge amount of technical damage, and the yen looked like the Monday break was very, very severe. But today's recovery is actually mildly encouraging, although I still believe that it's basically a recovery into massive resistance. The yen really faces huge amount of resistance in this 93.94 level, and to me, it only becomes unambiguously a buy. It becomes a clean, clear, crisp buy if we can basically take out 95s. If we take out 95s, that would reestablish the uptrend that's been in place here for a very long time and would really create a much more positive structure for the trade. Right now, it's really a recovery off a very, very serious technical break. A recovery very much into a pretty serious resistance level of 93.50s to 94.50s. And those who like to trade support and resistance, this is an area to consider. Obviously, you would be wrong if it clears into 95s, but there's a very high probability that it could possibly stall around here and come back and consolidate further. Having said this, though, on the downside, what's very, very clear is 91 seems to be a pretty good value proposition for a lot of the buyers, and we certainly have made a pretty serious bottom here. So at this point, yen I think is going to be burn and churn, and you want to probably trade at the edges of either one of these ranges, rather than trying to get cute and make a definitive call on how the trade is going to go. To me, the trade is only going to be a viable trade to the upside at 95, and a very, very negative trade to the downside if it breaks 91s, because that would suggest that this is a massive distribution top that failed, and then we could possibly unwind all the way down to the 88s. Aussie also approaching some really interesting levels here. This 101, let's come back here. We broke the one. We've been testing 102s. So 102.25 was a key level. We tested it, came back, tested it, came back down. We're testing this 102s, and of course, everything is in the eye of the beholder. It all quite depends on how you look at it. We certainly have not been able to penetrate much below the 102s, and the critical level, in my opinion, is the 101.50s, because that is the level right here that, if broken, definitely opens the path towards parity. So we have to watch this very carefully. Tremendous amount of data next week in Australia, both economic data, and we also have the RBA. RBA not expected to make any rate cuts, but it'll be interesting to see if their posture remains what I would call relatively arrogant, or whether, in a sense, that they basically foresee little serious danger to the Australian economy, and they believe that the current monetary policy is working as an accommodative palliant, or whether they become a little more guarded as new information comes in. There's also retail sales next week, and retail sales are going to be critical to really establishing the consumer demand in Australia as it stands right now. So those are two things that could really trigger us. We have to watch. They either support and solidify us, and then at which point we're right back, but right back to basically trading the 102, 103.50 level, because as you can see, the 103.50 level has been a major resistance point in the Aussie. And again, here, only a retake of the 103.50 to the upside would really create a much more bullish bias on the Aussie. Or a break in this case of the 101.50s to the downside in the Aussie would definitely create a very negative path towards the parity move as we get further liquidation. Last, I just want to finish up with the two COM dollars. The loonie has been very strong against this trend with the 103 taken out, but today was a big reversal day, and this is kind of interesting. The fact that the loonie kind of came up against this resistance, which I've been talking about for a while, the 103.50 resistance, suggests that maybe a little bit more consolidation is due, but still pretty much an uptrend. Although today's turn and a close at the lows suggests that perhaps we could get more of a move to the downside. One interesting variant of this is that maybe Aussie CAD is also turning, another pair that finds itself very, very heavily congested around the 105.50 level, which is the resistance level now. And to see we've come off of that level, so perhaps we could be headed our way towards the 104s, maybe even down to 103.50s in the Aussie CAD. This is an interesting way of trying to trade CAD strength, not necessarily through the dollar, but through the COM dollar cross. And then last, Kiwi dollar, lots of shaking and baking, but we're still holding mildly this 82 level. What was interesting was that we had this big powerful move above 83s, 84s, and then several just complete liquidation fake outs. The longs got really burnt here by trying to buy the 84 breakout. Big reversal, big break through the 83s, but 82 is a much more significant support level. So this would be interesting, is that if 82 is given, and by 82 is given, I mean like we're sort of trading 81.70s, 81.60s, then we really are distributing all the way down to 81s and underneath 81s, which is the next big area around here. So a break of 82s into this, 82.70s points us further to the downside. Only a retake of 83s kind of stabilizes us. But clearly right now, if you're a support trader, this is a pretty interesting support because you don't have too much risk here. You basically have 50, 60 points of worth of risk if you want to bet on the fact that 82 holds and we have a turn in the Kiwi. And that's pretty much how everything shapes up. Definitely lots of interesting stories, lots of price action next week, and hopefully a lot of resolution of a lot of these trends as we go forward. I wish you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out. Come visit us at bkforex.com. Every single day we trade the market.